Hey, this is Justin with DayTradeTheMarkets.com on first day of October 2013. And what I wanted to do today is look at several markets, the ES, the Russell, the Nasdaq, the Mini Dow, Crude Oil. Just strip away everything on our charts except for what we call our level 3 buying and selling aggression bars, our extreme buying and selling aggression bars, and talk about how you can use that as a bit of a roadmap to help you avoid being on the wrong side more often than not, so that you know what side that it is better to be on, obviously. And so I wanted to talk about a few things. Let me first start by very briefly talking a little bit about the software. What we do is we like to look at the bigger picture, so the bigger picture levels, bigger picture bias, and we talk about that every night in our member center. But then in real time, we're looking at some order flow based evidence that's giving us deceleration indication, a filter, real-time support resistance zones, and beyond that, it's also giving us what we call relative aggression bars and high velocity moves. So what I want to focus on today is I don't want to focus on the bigger picture. I don't want to focus on support resistance or divergence or the filter. I really want to just focus on our relative aggression bars and high velocity moves, and specifically what we call our level 3 buying and selling aggression bars. And these, what this is telling us is that under the surface, within the order flow, the only way the market's going to move is if one side collectively is more aggressive than the other. Obviously, if that didn't happen, the market would just sit there. So for the market to move, we need to know that one side is clearly more aggressive than the other. And what this software is telling you is when that is happening to a moderate degree, when that's happening to a strong degree or level 2, and when that's happening to an extreme degree. And we really want to pay attention. These extreme level 3 bars don't happen very often, but when they do, we really want to pay attention. We want to ask ourselves, is this the beginning? Is there follow through? Is this that's often a signal of the beginning of a nice vertical move, or is this capitulation? Is the market out of gas and it's a turnaround point? So by just looking at nothing but these level 3 bars, so again, getting rid of support resistance, filter, deceleration, all of that stuff, and just focusing on these relative aggression bars and high velocity moves, and specifically the level 3 or extreme bars, we can get a real good feel for what the market's doing. If we look at the ES today, and this is a 2-minute chart, I'm just apples to apples going to look at a bunch of 2-minute charts. You can use this on any time frame that you want, from really small 10-second micro scalping charts to swing trading charts and anything in between. So here's the ES, and you can see toward the end of the day on Monday, we started to get some pretty strong buying with some follow through. Whenever one of these buying aggression bars or selling aggression bars come in, a level 3, we ask ourselves, can the low of that hold and can we get follow through above? Can the low of that hold and can we get follow through above? And as long as that is happening, and here's the first bar of the day today, or second bar of the day today, we ask ourselves, can the low of that hold? And you can see that it does, and that's in fact one of our, what we call our level 3 retracement trade, is a really nice low risk trade. So we got follow through. Can we get acceptance above? And you can see that happened, and it happened on another level 3 buying aggression bar. We ask ourselves, can the low of that hold? Can we get follow through above? And you can see that happen. So what that's telling us is that bulls are clearly in control of this market, and until something changes or until one of these is rejected or taken out, and you can see that's not what happened. In fact, the market traded right back to the top of that bar later on before its last move of the day at the close. That's telling us that, number one, you don't want to fight that. Even though if you're thinking bigger picture, the market might be going down, the structure in the immediate structure real time of the auction, of the real-time auction, is telling us that buyers are clearly in control. We don't want to fight that. And in fact, I look at that. I'm going to show some other charts in a second, but let me just show something real quick. This is something I put on my screen every day when I'm trading. It's what I call the 7 jobs. And number one, first and foremost, is I need to be aware of my mental state. If I'm in a good mental state, I typically make money. When I'm feeling frantic, panicked, worried about money, focused on if I missed out on a trade, versus just focusing on making good decisions. When I'm in a bad state, I typically lose money. When I'm in a good state, I typically make money. So that's job number one for me. And if I can identify in real time that I'm in a bad mental state and I have the discipline to just walk away, I save myself a lot of money. So that's job one. I know that's not the sexiest thing to talk about, but it's really, to me, the most important part of trading once you have a decent understanding and a decent tool to make sense of the market. And then job two, which I think is obviously just almost as important, is I ask myself, can I determine which side I don't want to be on? Okay? So it's not can I get into a trade, it's can I determine which side I don't want to be on. Okay? Just doing that keeps me out of a lot of bad trades that I might otherwise talk myself into being in. And it then can take me on to job 3, which is determining, do I want to be on the right side, the quality of the opportunity, how much risk I want to take, how I want to manage the trade, and then if I can, accept that decision. I won't get into all that, but I just want to focus on job 2 here. Can I determine which side I don't want to be on? And again, the way that I do that is just use this roadmap idea, and this is clearly telling me that short-term structure-wise, bulls are in control of this market. I don't want to be on the short side today. Okay, just with these level 3 bars on high velocity moves. Let's look at another market. Let's look at the Nasdaq. Again, a 2-minute chart. You could use this on any time frame, whatever your style would be. And again, toward the end of yesterday, we started to get some pretty extreme buying, and that we had a little bit of follow through in the overnight session. And when we open here, we get a high velocity move made by buyers. And again, we ask ourselves, can the low of this hold? Can we get a movement above? And that's what happens. That's telling us bulls are in control. You don't want to fight that, okay? Unless you have other evidence that comes in. Here's another high velocity move in level 3 bar. Can the low of that hold? Can we get acceptance above? Yes. Okay. At this point, I'm still saying bulls are in control. I don't want to fight that. Here's another level 3 bar. Can the low of that hold? It certainly tested below it, but it didn't really even have any full bars below, and we got acceptance back above. Still, I don't want to fight that. I don't want to be on the short side. Can the low of this one hold? Well, this time you can see actually something did change. Before the low was even tested, we got a level 3 or extreme selling that came in off of this high. That one had some follow through. So does that mean you automatically want to be on the short side and we're going to go make new lows? No, that's not what that means, but it is telling us this pure wave of buying aggression has at least come to an end, and now we're more into a two-sided market, okay? Now you can see the next major structure we had was this level 3 selling aggression bar. Can the high hold? And you can see that it did. Can we make new lows? Not really. You can see that we then tested back above, and that was what we call a rejection. So here's buying with acceptance. Here's buying and with rejection and some selling with follow through. Here's some selling with rejection. So again, you'd want to be on the long side, not the short. This is more of a two-sided market. Be a little bit nimble. And then this is telling us we're back to bullish control when this is rejected, okay? So again, it's just kind of the first building block, the first tool. We go a lot deeper than this, obviously, but just that first building block talking about which side do we not want to be on, this is certainly the tool that I use and that we certainly teach as well. Well, let's look at another market. Okay, here's the Russell, again a 2-minute. Toward the end of yesterday, get some good buying. We open up with some good buying. We ask ourselves, can the low hold? Can we get some follow through higher? And that starts to happen. Now, as we've tested the high, we actually get some selling, some extreme selling that happens right there. But you can see we don't get any follow through. The high doesn't hold, and in fact, we reject that pretty quickly on a high velocity move and a level 3 bar. Very nice reversal pattern saying that bears attempted to step in and get aggressive. They were quickly rejected. Bulls are very much in control of that market until something else happens, okay? So again, this is kind of that two-step where we had a rejection of selling, follow through of buying. Clearly, bulls are in control of this market, okay? And again, you can kind of see where we ask ourselves, can the low of this hold? And then can we get follow through higher? And you can see that the market will often test back if we get back to the upside of one of these bars as well. So that's another one of our trades that we call a level 3 level 3 continuation trade. So let's look at another market just for the heck of it. Let's look at crude oil. Whoa, sorry, wrong marker there for a second. But again, here is the crude oil market. Our first major structure of the day was this level 3 selling aggression bar. We ask ourselves, can the high of this bar hold? Can we get follow through? You can see that did happen. The high, level 3 retracement would have worked out very nicely. We go make a little bit of new lows. We can't get much follow through there, and then we come back and test the highs again. Now you can see that we didn't get anything above that. We got no buying aggression above that. When we tested these new highs, we couldn't get any follow through, and then we sold back off with a level 3 bar. We ask ourselves, can the high of this hold? And you can see on the very next bar, the level 3 retracement worked nicely. We took out the lows. Later on, then you can see we got some buying off of the low though. Here, and there's some level 2 stuff that I'm not showing, but just looking at level 3s, then you can see buyers step back in with follow through. We close on our highs. Okay, so again, just using this as a roadmap, just as the first basic step of what side do I not want to be on. Okay, and that's again what I look at as well. Job 1 is mental, but job 2 is avoiding bad trades. Okay, if you did nothing but help yourself avoid more bad trades, not even getting into managing trades better, getting into more good trades, judging the quality of trades, not even getting into that, but if you can do nothing more than improve the number of bad trades you get into, you're making huge progress in your trading. So hopefully that makes sense. Just again, follow the level 3s. That's kind of the first building block, the first thing that we talk about. So let us know if you have any questions about that, and we'll talk soon. There's obviously other videos on the site. They're more basic. We run through all of the pieces of the software in detail if you go to the How This Works page. And also, I would invite you to write any comments below if you have any comments or questions, and we'll get back to you as soon as possible. Okay, thanks so much, and talk to you later.